Okay, so since we last talked, we were in this long, and then we started moving to the downside in that range, right? We started moving to the downside, we bounced to the bottom of the range, and we kept going higher. I wasn't in this trade, you were, so this would be like you did take profits here, right? Okay, so then what happens is we spike to the downside here, and we go further up. And as we go further up, we are at the top of the range, right? The range is right here. One second. The range is right here, the top of the range. So we touch the top of the range, and we top out our 1 hour. And then when you look at the 3 hour is just topped out regardless and starting to move down. See how there's a continuous movement to the downside? 4 hour, yes. Continuous movement to the downside while we're still in the range. So we did not actually, like, there is the continuous movement to the downside, but we did not break this level for a long time. So the stochastic was going down, 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 but we were just ranging around here. But it started, like the momentum started shifting. And if we go to the 3 hour, same thing here. We started shifting to the downside, going down, 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 down. And this is how the 3 and 4 hours usually work, is that there's some movement in the stochastic and then the price moves, right? Because it's a slower indicator, because it's a higher time frame. So what we had here was a confluence of the 1 hour topped out, the 3 hour going down, and the 4 hour going down, right? And I can put this to the settings we talked about. 1818. There we go. So now it's just, smoother, really what it is. But you can see that top is at the top of this range, and then it just starts going down. And you see how the stochastics very well aligned with the price here. Here, oh shit, that was the 3 hour. Sorry about that. I will keep this on the 1413, and I'll move it on the right here. There we go. I don't know why my settings are messed up. I should have one. Okay, so same thing here, top at the top, and I'll just move this onto a 1416 as well, just so we have it. So tops right here on the 1 hour, the 4 hours moving to the downside together with the range, and the 3 hours also moving to the downside. So here, right here, we have a confluence of the 3 and 4 hour that are moving down. So if we looked only 3 hour and up, we would be like, okay, there might be a short happening here, and we already see the start of that short. And then when we look at the 1 hour, we had our final top right here, so at the top of the range. So we can short on the 1 hour, on the 3 hour, and on the 4 hour. So the logical thing would be to, at the top of the range, to enter a short, because here we're at the we're topping out on the 1 hour, and if we go lower under the lower time frames, we would be topping out as well right here. So right here we topped out, right here on the 15-minute we topped out. And why is this relevant? Why do we look at the 15 and 30-minute as well? Well, because the 3 and 4 hour are telling us where the price is going, right? So now we can look at the 15-minute and be like, okay, this short here might be a very viable short. It might be very viable because we're trading the larger move, and we're using the lower time frames to time when to enter at the best time. Ideally, it would be when the price starts moving down and the fifth, like the lower time frames start moving the stochastic down. So right, that would be around here in this candle right here, which is also the top, by the way. But we'd probably enter a little bit later. And then on the 30-minute, the 30-minute would move with it together 1 hour, and then the 3 and 4 hour are moving already. So that's our strength here. So now, does that make sense so far? So now we have a short, and we're going into a short, and we're breaking to the downside, right? So here would be like the TPs that we would set up. And I was kind of waiting for you to um, look at the short or like point out the short. Probably something like this, right? So we'd probably hit TP 1 and 2 most likely. So so as we keep going down, what starts happening is that our 3 and 4 hour will start evening out, right? So they, in the middle of the move, they start evening out and start going up together. As they do, our 1 hour bottoms out flat as well and starts going up. And if we go lower, our 30-minute as well bottomed out starts going up together with the 1 hour, and our 15-minute is bottomed out going up together with the together with all the other ones. So here as well, we have a change in movement, and again, the ideal entry would be somewhere in this candle, towards the top of the candle most likely, because that is when you start seeing the the um, the stochastics move on the higher time frames, and then on the lower time frames they predict it because they are bottomed out, and you see this bottom level is at the same level right here. I can just show you. The bottom level that we're talking about is here, 1445. So this bottom level is touched this level, and the only time we touched it or we went past it was here and here. And those two times when we touched it here and here was here. So clearly we were going up, and here which we were going up as well, but that was a little bit further before this move. So so by having the 15-minute being low enough like this, the 30-minute also touching the line here twice actually, and then the 1 hour bottoming out, going up, even the 2 hour, right, bottoming out. The 2 hour hasn't been this low since here, which is, we don't even know where that is, right? So they got, so what happened was that we were at the top of the range, we had a short, and then all our stochastics strained to the downside, which then moved the 3 and 4 hour to the upside again. So this would be another possible long. No? Does that make sense? Back to the range essentially. And right now, what we're doing is we're at the 3 and 4 hour and moving to the downside, right? I would assume that if we go to the lower time frames, motherfucker, what is going on here? When we go to the lower time frames, we will have a we will already be in the move. Possibly the lower time frames can be bottomed out here. Okay, 3 is going down, 4 is going down as well. We can look at it here, 3 and 4. 4 is just about turning, right? So that's still a bearish sign. And then if we go to the lower time frames, we can see that they've been chopping around. They're at the, close to the bottom as well. So this time frame is too low to look at because we don't really know what's going to happen on the 30-minute. We're bottomed out. So the larger time frames are topping and going down. The lower time frames are bottoming out. So the next trade that I would be looking at is the lower time frames topping out while the higher time frames keep going down. And as that's happening, when that happens, then we'll have a good short where we can break this level and go lower. Does that make sense? When we have an alignment on a 3-4, where those higher time frames will go depends on the lower time frame. So we'll go to when we go to the 30 and 15 minute, right now they're misaligned. But if they go to the top, right? So like, let me ask you a question. Where is the stochastic gonna go? The 3 and 4 hour are topped out going down, and the 3, 5, 15, 30, 1 hour, and 2 hour are all topped out and going down. Where's the stochastic gonna go? Exactly. So we're waiting for that situation, right? We don't enter now because we don't have that clarity. We don't have that alignment. What I'm saying is because the 3 and 4 hour are going down right now, that's the only thing that we're looking at. So the only time we could enter is if the lower time frames align with our higher time frames and go together. Because the lower time frames can go up and down all the time, the higher time frames are harder to move. So, and the daily is actually in our way, like in our favor as well. So, and I'm not saying that this will be a huge short, and honestly, it doesn't matter. I don't really care. I just see that when we have this alignment, and our lower time frame, so 15, 30, and 1 hour would top out together and start going down, then that's a very, very easy short, you know? And then once the lower time frames bottom out again, it's a whole different story. We exit and that's it, you know? Then by that time, maybe then the 3 and 4 bottom out again. And if they bottom out, and then well, guess what? Then we'll wait for the lower time frames to bottom out as well. And then we'll go together to the upside. So really, we're just waiting until the lower time frames align with the higher time frames. And when they do, we can trade it. The 3 and 4 need to be aligned, right? Together, the lower time frames need to be aligned together, and then the higher and lower time frames need to be aligned together. And when we do that, we will have high probability trades, right? The probability of those trades happening is very, very high because we're looking at the overall market, overall market direction, you know? So, and this is just Bitcoin, you know? We can literally do this on any coin. But the point is that, and this will get clear for you the more we do it, but the more we do it live, because we will have time and we'll, you know, you will go through watching it live and watching it unfold in real time, which is very, very different from backtesting. And we will see how it plays out, right? Would there be a good trade here at the top of the range right here? Well, yeah, 4 hour not topped out. However, the 4 hour is the most dragging one, right? So just the fact that it's towards the top, like close to the top, can be okay as long as our lower time frames are helping us, right? So at this point, like I would not go in any earlier than this, because at this point, at the end of this red candle, when we look at the stochastic, that's the first time it goes down, right? And then the question is, okay, what are lower time frames doing? So that was around here, right? So our 15-minute topped out here and started going down. The next high that it did is lower than the previous high. So that indicates that we're moving down. 30-minute, same thing, topped out, going down. Previous high is lower than this high. So at this point, we could be like, okay, this is a good short. Let's just move the line here. Let's just move the line over here. And this would be a good entry on the 15 and 30-minute. Let's see what the 1 hour is doing. 1 hour, same thing, right? Same exact thing. Topped out, we're going down. And notice that we're waiting on all of them. We're waiting on the 15, 30, and 1 hour. We're waiting until the stochastic starts moving to the downside, right? On the higher time frames, you might need to predict it a little bit so you don't enter too late. But the 3 hour in this situation, let me just switch to the 3 hour here so we see it. The 3 hour on this situation is actually going down as well. It's somewhere in the middle of this candle. And then the 4 hour is not going down yet, but it's towards the top. That is enough. That is enough for us, right? So at this time, this would be a good short. Right now, what do the time frames do? We're kind of at the bottom and we're ranging around. Ranging around is something that we don't want to see if we want clear, clean trades, right? 1 hour is bottomed out, 30 minutes bottomed out, 2 hours going towards the bottom, 3 hours going like in the middle going down, and 4 hours just on the move going down. So this is not a strong enough alignment for us, even though you could risk it and trade the lower time frames, but we don't do that because we want to wait for the alignment for those for the lower time frames. If the 3 hour was, you know, towards the bottom and the 4 hour was towards the bottom, then this could be a good long, you know, and you would see that the move of the long would be much, much bigger too. because the higher time frames give it space. Right now, they're pressing against it. So that's not a good time that you'll have. More likely than not, you will be in a loss here. So we don't want to do that. But so we only listen to the lower time frames if the higher time frames are in alignment with us. You know, Makes sense. So really, what we want to do now is what are we looking for right now? When would we enter Bitcoin? Yeah, like what has to happen? What has to happen in order for us to either short or long Bitcoin? Right, exactly. So we could short here based on, and this is always, when we think about the decisions, we need to have the 3 hour or 4 hour open, not the lower time frames, because you get caught in them, you get lost in them, right? You very easily forget that the 3 and 4 are in a completely different move, because when we look at the 30-minute and 1 hour, you can get excited too long, but the 3 and 4 are going against you. So yes, what we can do is because when we look at the 3 and 4 hour, they're still kind of early in the move. So if our lower time frames top out, we can short. Other than that, we need to wait for the 3 and 4 hour to finish the move. And once they finish the move and our lower time frames bottom out, which by that time they will probably have gone up and down at least once, if not twice. If they bottom out together with the 3 and 4, then we can long. So most short term, the thing that we can do is short once the lower time frames are aligned. And if that doesn't happen, which doesn't have to happen, what can happen too is that the lower time frames start pushing higher and then the 3 and 4 hour turn around, which is fine, right? But we want to make sure, like, we don't want to enter a long when the 3 and 4 hour are this far up, because it can be a fake out, it can be whatever, right? So their only condition when we can long is when the 3 and 4 hour align at the bottom and or are within the move already, and we get that extra boost from the lower time frames, the confirmation and the boost from the lower time frames. From the higher time frames, for the short, we are right now in the move to the downside, and we still have enough space to the downside. So if our lower time frames give us the confirmation and the boost, we can enter a short. And both of those scenarios would be high probability scenarios, because if all of those align, then you will have a really, really easy time trading and managing this trade. Usually, like when you start trading this, you will not always have, the perfect entry here, right? But if you do it enough, you'll probably have it later. And later, by the way, is better than earlier at first. And then, you will get closer and closer to this line, which would be pretty much the ideal entry. The ideal entry it would be because you have a clear confirmation on the 15-minute, you have a clear confirmation on the 30-minute because you have a lower high here, and the 3 and 4 hour are topped out and going down. The 3 hour is textbook, beautiful, right? And the 4 hour was a little premature here, but it was pretty high to the top. Keep in mind that this is on the 14.16 setting. If we actually use our 18.18 setting on a 4 hour, then that is going to be more lagging. The reason we do that is we on purpose take that time frame and making slower, because then it's going to be harder to move. So we will get that 4 hour will really give us the overall strong move. So, but the thing is, though, that it's going to react slower. So everything else is going to turn around. Even here, everything else is going to turn around to the downside before the 4 hour turns to the downside. So we're not really looking at the direction, but we're looking where it is. Because if the 4 hour gets all the way towards the top here, then and our lower time frames are starting to go down, then that is a very, very good situation for a short. So right now we would actually still be in a short. We would have taken some profits for sure because our 15 and 30 minute are are bottoming out. And by the time our 1 hour bottoms out and starts going up, I would probably exit that short just in case. Our 2 hours still has some movement, 3 and 4 still have some movement. So either exit or take a good amount of profits. The ideal way of playing it in this situation would be to take 50% profits or something like that at the time that the 1 hour bottoms out and goes further up to the upside. The 2 hour, 3 hour, 4 hour are still in the move. The 4 hour barely moved, so we can still have a big move to the downside. That's very possible, which would be great if we were in a short. So if we entered here, we would be in a very good position right now because we're high in profits. We have a good entry, and we can just wait out and see if this big move happens. For us to enter into this big move, the only time we can do that is if the lower time frames align with us. Make sense? Absolutely. And that's why I say you're not allowed to press the button unless you tell me, right? You need to tell me, and we need to go over it, and we need to go through what we just said right now. We need to go through it live and be like, okay, lower time frames are aligning, high time frames are in the move. We're in a good position to trade. Now we will enter the trade, and you will see how you will be like, oh wow, I did not think that trading can be this simple and this straightforward, and it's profitable. Whereas you can work your ass off and stare at a chart for 14 hours a day and just make losses. Whereas you can look at it this way in a structured, calm, patient way, and you will have a much simpler, easier, and more profitable time in the market. So we when analyzing this range earlier, right? We made the two boxes. We'll just drag it over. Drag this one over too. This is a TP level, which aligns perfectly with our 1 hour bottoming out. This is our range for the stop loss. So when we set up our trade, say enter here, we will make sure that we cover this plus a little bit of extra. But the way we cover this, right, is by having more entries here. So in case we go higher up, we will turn a negative situation into a positive situation, because as long like this, if the price goes all the way up here, which is a big move, and the 3 and 4 hours still would go to the downside, that is Christmas for our strategy. Because what that means is we only have a wick. We can identify that it is a wick because our high time frames are still going to the downside against, right? So we would have beautiful entries here, average entry probably here if we have a big wick, or here, whatever it is. And we would just increase our profits for free with lower risk, right? So that would be a good situation. In order to do that, we always need to have some sort of capital set aside, plus the calculation of making sure that we do not risk more than 3% in the trade. And our TP levels would be bottom of the range as we hit, then the bottom extreme of the range as is right here, and then the next range right here. And then you can have like a full cent TP, but it doesn't really matter. So the TPs would be here, here, and here. So in this case, TP1 is hit, TP2 can still happen, TP3 can still happen as well. Our 3 and 4 hour are still well in the move. Our daily is topped out, so that can just help us. If the daily move happens, then we're talking about a much bigger move. We can just look at it on the daily, right? If the daily bottoms out, we can go all the way to here, in which case, that would be a move like this. If we go to the 4 hour, we can see how big that move is, right? On the 3 hour, we can see how big that move is. It's a pretty big move, and that would be a very high risk to reward for us. It might happen, it might not happen. It does not matter. We don't care. We will only do what the stochastics tell us to do. Does that make sense? There's, a million ways to trade. So like I'm not looking at patterns because I think that they're a joke. I just know what works for me. I know that looking at the stochastics will give you a good indication of price. I look at ranges, and then I just go based off of that. But I can tell you that many times when trading, I don't even look at like I don't even know what the price is. The only time I look at the price is when I put in my limit orders. But other than that, I could not care if the price is 50K, 10K, or 300K. It does not matter. Price action does not matter to me other than tops and bottoms of ranges. Why? Because it's simplified. It's simplified, and we're focusing on the one thing that I have life proof that works, that has made us hundreds of thousands, like cumulative, like millions of dollars, and it just works. So that's what we're focusing on, You can look at other things and so on and so forth, but like at the very base, especially when starting, keep it simple. Only look at stochastics, and I'm telling you, you will have a good time. So now what we'll do, like your only job in trading right now, the only job that you have is to watch Bitcoin with the setup that I did. I'm actually going to send you this chart so you can make a copy of it. You will watch this setup, and you will watch if we can either short into the move when the lower time frames are aligned, or the 3 and 4 bottom out and we can long. And it's your job to watch it and tell me when you think the time is right, and when it is, we'll talk about it. And if it is, then we'll both trade it together. Okay? That's all right. It's slowly moving, so you're fine whenever you have time. Like if you check, like that's also a great advantage of the strategy. If you just check it every couple hours, you'll be fine, because you will see that okay, now a move happened. Okay, now it looks like we're close to bottoming out or something like that. So like right now in this situation, the lower time frames still need to top out, or the higher time frames still need to bottom out, or turn around. So, regardless, it's going to take a couple hours for the 1 hour to top out. Like, let's just see how long this move usually takes. We can literally measure it from bottom towards top, 18 hours. From top towards bottom, 17 hours, right? So, we have time, right? So sometime within the next 15, 20 hours, there will be something, either a top or bottom on the lower or higher time frames, where we can then take that information and be like, okay, this might look like something that we want to trade because there's an alignment. Sounds good? So there's no rush. We just want to make sure that that we have the alignment, that there's a confirmation, and we let the price do what it needs to do. And once it's ready to align, and once it's aligned, then we trade it. All right, man. Sounds good. I will not overload you with information. This is like has that this leverage has a huge leverage, right? So this information has a huge leverage. So just what we said, keep it, like look at Bitcoin, see when the alignments happen, and that's the only thing to look at first. Don't look at anything else. And when the alignment happens, then we go from there. Okay, we'll take it step by step. We'll take it slowly, slow down. We won't overtrade, so you won't be in situations where you trade too much and you lose. No, we will only take those market making trades, right? Those slow trades, high probability trades where we have time to enter, we have time to think, and that are the highest probability to work out our way to. So that's what we'll do, and I'll let you go to work or sleep a bit more. Depends on of what you can do, but yeah, just every once in a while when you have time, I'll send you the copy of this chart. Take this chart, look at the different time frames, and it is your job to tell me when the lower time frames top out or bottom out, and when there's an alignment, and we go from there. Okay? Um, 0% when you're not trading with me. When you're trading with me, a you don't want to risk more than 3%. So we will do the calculation ourselves when we um, when we're there, right? But we'll go based on our risk level, based on our stop loss, and then we'll calculate how much can we enter with what leverage, if there's leverage, probably is, by the way, in order to not risk more than 3%. We will not take any trades outside of that at the same time. So we'll be okay with that. So even if we enter with 100% with a little bit of leverage, it's going to be okay. In this situation, if we don't want to risk more than 3%, how much can we enter with? Do you know? The stop loss would be at 1.25%. If we entered here, the average would be somewhere here. So approximately 0.8% on spot to hit our stop loss. So in that case, we could enter with a little bit above a 3x leverage, like a 4x leverage. So full account with 4x leverage, we can enter in this trade because the maximum that we would lose would be 3%, which is the number that we're going for. And the reason we're going for that is because of the volatility of the strategy, and the strategy with its volatility in its very bad case scenario of 1% chance of happening, you will still not lose more than 20 to 30% of your overall account. So that's okay risk management. It's still investor wise, it's still on the aggressive side, but it's very, very manageable compared to what I've seen in the Discord happening, right? So in this situation, we could go full account with 3x, so we don't lose more than 3% of our account. And then with full account, I mean not your entire net worth. With full account, I mean the portion of money that you have segmented out for trading that you are okay to lose, right? So we have many, many security steps in between, right? First of all, we expect, or like we don't expect, but we are okay with the money that we risk. We understand that there's a risk involved with it and we can lose that money, number one. Number two, when trading the money, we will not lose more than 3% no matter what. In this situation, high probability strategy, worst case scenario, we would lose 20 to 30% of the overall account. If we're okay with that, we can trade with 3% risk per trade. And then based on that, depending on how well we enter, the upside is going to be better. So here we can probably enter in with 4x. So let's just assume that our TP, or our average exit, would be around here. So 3%, 4x, that's 12%. So we're risking 3% in order to make 12%. All right, so 1 to 4 risk to reward. And if we trade this, on an overall basis, and our average risk to reward is 4x, then we're doing really, really, really well. That's when we looked at our analysis dashboard, right? Like that would be outstanding. So even coming close to that would be good. That make sense? Perfect. Yeah. So yeah, once again, we just want to make sure that we keep it simple. We look at like less is more, right? We want to stay focused on the things that matter. We want to let it play out, have time. Patience is key here. And then then you will see how the calmer, more calculated decisions will drastically change your performance.